Hi, I'm Pattu from freefincal. Today, let's talk about booking profits from small cap mutual funds. This post is after the news from SBI small cap fund that is going to close lump sum investments from September 7th and is going to only accept SIPs of rupees 5,000 or less. And does this mean that it's time to book profits from small cap funds, because they usually do this when the valuations are high or when they believe that any more AUM will mean that it's difficult for the fund manager to find opportunities. I had already talked about small cap mutual funds several times before, and I have always maintained that typically retail investors do not need small cap mutual funds. They're just too frustrating. The problem with it is that retail investors tend to believe in the SIP, and if you use a small cap fund SIP, it can simply be frustrating. Suddenly you will get huge gains, all the gains will be lost in a few months and so on. I've talked about this before, I've made videos on this before. If you go to the community page, you will be able to get this link. I'll probably post it in the comments as well. You will also be able to get all the associated links. I had used a method using double moving averages, 6 months and 12 months moving averages, and sure that it's a good way to tactically enter and exit in general for equity, gold and gilts, and in particular for small cap mutual funds. So we shall be using the same idea to find out whether it's time to book some profits, partial or full profits from small caps as it is. So before we do that, let's try to get some context about this decision by SBI's small cap fund. Many of you may remember that it had opened for lump sum just about less than 6 months ago, from March 30th, 2020, that is after the crash, 1 week after the crash. It opened for lump sum investments again, and within 6 months it's now again closing back. That's because the small cap space has quickly improved. The fund has also shot up significantly in NAV during the last few months, maybe more than 60-70% or so. It must have moved up. I don't remember the exact number. So if you look at SBI small cap, like all funds, it also started similar funds in the category which started before the SEBI categorization rules. It started out as a small and mid cap fund. I had shown in my review that it's a very good consistent performer, and since about mid 2018 it became a small cap fund. Initially, right from day one, it had a capacity constraint of 750 crores. They said that they will close the fund if it reaches 750 crores, and this happened in October 2015, and they closed it completely and they reopened it via SIP route only in May 2018. And since then they have been able to mobilize significant AUM just via SIP. And if you see the AUM history of the fund, you can get it from the fact sheets. It had an AUM of about 2,700 crores in March 2020. The AUM shot up to 4,270 crores in July end, and now it should be more than 5,000 crores. So this was the aim when they reopened lump sum. They wanted 1,000 crore influx, and in addition, with the market movement and inflows, they have got what they wanted, and it's a very nice chunk of profit for the AMC, and deservedly in this case they have done very well, so there's no problem with it. So we are going to use this moving average tool. You can purchase this tool from the menu of freefincal. If you just go to the top menu, if you go to the main menu here, if you just go to the main menu here, you will be able to get this tactical buy sell tool, and that's the tool. You can purchase the tool from there and find out how I use it. In general, very quickly, it plots the 6-month moving average, the 12-month moving average, and you can also plot any month single moving average as well. And you will have to supply the NAV, the fund NAV or the index NAV, because I can't add that into a paid tool because of the terms and conditions of the data provider. But if you have to supply it, you can provide the daily NAV, and then it will automatically plot the monthly NAV. The monthly NAV of the SBI fund is shown in blue here. The 12-month moving average is shown in red. The 6-month moving average is shown in green. And whenever the 6-month moving average, that is the green line, is above the red line, the 12-month moving average, it is a buy signal, and that buy signal is dotted line is shown in the right hand scale. The buy signal is 1 and the sell signal is 0, even if it becomes 0. And you can see here, right from about May 2014 to 2018, in that 4-year period, the price was well above both the averages for most part of the time. It fell down only for a short time, and the signal dropped to 0 only for a very, very short time. But then it picked up again, and that's the nice bull run in the small cap space. And from February 2018 onwards, as many of you know, both the small cap and the mid cap segment started falling down, and you can see the price fall down, and gradually the 6-month moving average, the green line, fell below the red line, and the buy signal goes to 0 here. And you can see the green line has been below for a while now, and then and it only in the last few months, or I should say towards the end of last year 2019, it moved up, and and stayed there for a couple of months, and then it fell down. Now the current situation is that the 6-month moving average is well below the 12-month moving average, but the price is significantly high, and that probably means that it is definitely not at least it's definitely a good time to get some profits, partially or fully book some profits if you have the profits. If you don't have the profits, it's a different matter. And this up and down movement simply means that it's going to be a kind of a sideways kind of movement for the small cap space, and that's intuitively clear because of the poor GDP numbers, and small businesses are going to struggle for some time after the lockdown and so on. So it's going to be some time before you see a very nice up movement like this, where the green line is significantly above the 12-month moving average very nicely, and the price is also above both of them. That's not going to happen for some time. It's going to see some the buy sell signal is going to fluctuate from 0 to 1. That's called a whipsaw. That's going to happen in all technical indicators. And I mean, you from this chart you can see why SBI decided to close down the fund. It's a good move, and I think it might be a good move for small cap investors to book some profits if they are sitting in that space. And if definitely those who are going to invest via SIP, or who are looking to invest in the small cap space now, they probably are, that is when I say now, I'm talking about here, they probably are going to face some frustrating months of poor returns. Probably those who invested right here at this peak, they may be able to get some gains perhaps in future. I'm not sure how much, but that's just pure simple guesswork that anybody can do. But this indicator, if you take it seriously, I'm not saying you should take it seriously, I strongly suggest that you read the disclaimer in the article. All technical indicators, when you work with them in real time, it's you don't know whether they will work at that point or not. It's only in hindsight you can say it. And like I said, there will be this up and down movement, which is the whipsaw. The buy and sell signal can fluctuate rapidly up and down, and that can be very frustrating, and you will have to use your own qualitative judgment at this time. And I am at this time using a combination of what the signal tells me and some qualitative judgment to say that, look, the 6 months moving average is now nice, well below the 12-month, but the price is high, and that does not at least for some time you can expect the signals to fluctuate, and therefore it's okay to book some kind of profit. That's what this reading tells me. I am not invested in small cap funds, so you will have to take your decision on what to do about this. There will always be you can always argue how can you decide on 6-month average, 12-month average, and so on. That's always going to be there. That's a justifiable criticism. But the point is this, that you have your indicators, if they are like 3-month average and so on, then the up and down signal, the buy and sell signal, will be too frequent, and that's not practical. And if you are looking at 18 months, 24 months average, then too much of the information will get averaged out and the noise will be completely lost. So you have to choose something in between. There is no right Goldilocks kind of zone, neither too hot, neither too cold kind of right zone is not there. As long as you understand that this kind of tactical asset allocation is to reduce risk in the portfolio and not for higher returns. Let me repeat that again, not for higher returns, and it probably to reduce some frustration for the investor. As long as you appreciate that and approach this tactical asset allocation idea with this mindset, then somewhere neither too short a monthly average or too long a monthly average, you should be reasonably good enough. So please exercise your own due diligence and take your decision. But as far as what this indicator says and what anybody can guess from the current market, it does look like it's, if you are sitting on some profits, you might want to book and save yourself from frustration, some frustration. Bye bye.